Hey, who wants to talk about investment strategies?
Hey everyone, welcome to the War Room live. I'm Ryan Tanel, top producer Investment Capital, and I wanted to create this event as a series of events. I want these to come on Wednesday nights. We're gonna have to figure out the formatting. Originally, I'm thinking, hey, I'd love to be able to have this be a group that can meet up once a week, every Wednesday night. I don't know if I'm gonna be able to keep that up for a while. So I think these first two, let's kind of taper it off and do one every, 2 to 4 weeks. And we'll just kind of see what the tempo is. And eventually we'll move it up to once a week. But the point of these conversations are similar to a podcast. I want to have real world conversations about what real estate investing is like in the real world. A lot of HGTV and a lot of these, fix and flip gurus and guys that say, hey, I made 50 grand or 100 grand on this flip, making a few phone calls, filling out a contract. Real estate's pretty easy. I feel like there's not a lot of transparency in what the real numbers are, what the real struggles and difficulties are. There's a lot of people that lose money in real estate. So the point of all of this is to be transparent, to share education and knowledge and teach people about what real estate investing is really like, especially right now when we're going through a recession, when we're going through hard times, when people's homes are losing values, when interest rates are going up, when there's no product or inventory on the market to sell, and a lot of people are in trouble. So I'm going to have real conversations. I want this to be similar to a podcast, but when I say live, I mean you guys here in the audience can see us having this conversation, and you guys can comment and ask questions to myself, to any guest that's on here, and be a part of the conversation. If anybody has a story to tell, feel free to send me a message, and maybe we'll get you featured on here one week. So anyways, the format for this, I'm thinking we'll probably do 20, 25 minutes with me and the guest going over their story, their background, their questions, how they've contributed to the investing side of real estate, and then really open the floor up to you guys and just see what do you guys want to hear, what do you want to know, what questions are you got in mind for our guests that we can help elaborate on. So with that, let's just kind of dive right in. This is the first one. We might have some technical difficulties as we figure all this out, but I promise each week we'll get a little better and more sophisticated. It's going to turn into a real production here soon. So as I mentioned, I'm Ryan Tanel, top producer Investment Capital. We do apartment investing here in Texas, and I'm proud to have our guest, Leighton Moore. He's a business partner of mine. He's been doing real estate a lot longer than I have, and he has a ton of stories. So welcome, Leighton, and I'd love if you want to share your story, your background, and spend about 5 minutes telling everybody where you came from and how you got into the business.
Hey, thanks for having me on, Ryan.
Definitely.
So from a real estate perspective, my world and real estate is very intertwined with construction. I would consider myself a construction guy just as much as I am a real estate guy. And how I got into real estate was I looked at construction as a conduit out of college. So right out of college, I started doing demolition work and small government contracts. And I was linked up with an insurance company. And my main source of projects right out of the chute were insurance adjusters would call me when a house burned, and I would go do insurance work and clean the house up, demolish the house if it was a total loss. And, from there, it just kind of grew into doing some commercial things along those lines. But it really, demolition's great because there's really hardly any punch lists and it's pretty easy. It's heavy equipment intensive, but what I really wanted to do was learn how to build houses and basically do commercial construction. And so I was at a crossroads. I always knew that I wanted to do real estate. And I would guess that probably it came from my dad. He was the one that planted the seed. He's an insurance guy, but he always had a good eye for real estate. And he would buy property here and there, and he knew different real estate people around Austin. He's introduced me to some of the oldest Austin real estate developers and biggest real estate developers in Austin. But I was at a crossroads at one point, and I knew that I wanted to get into real estate, and I had taken all the real estate courses, and I was ready to take the exam. But I asked myself, I said, do I really want to wear a suit and go and sell other people's property? or do I want to do it? Do I want to get into real estate from the perspective of knowing the property and then selling my own? So I made a decision. I said, who is the biggest home builder in the country? And at that point, in Austin, it was D.R. Horton. And so I was fresh out of college. I had owned my own business. I was ready to take the real estate license. I had asked a few very successful real estate agents in Austin what they would do if they were in my position. And almost everybody said, go build houses and then get into real estate. And so I took that advice, and I walked to D.R. Horton, and they hired me. And I started as a superintendent, and I worked there for about a year and a half, and a whole bunch of Avery Ranch in the Austin off of Palmer Lane. We built a lot of that when all that stuff was under construction, 2003, 2004. And we were blowing and going, building. We were the highest producing division in the country for D.R. Horton, and our division right there was the highest producing within Austin. And which it was a lot of fun. Working for D.R. Horton taught me a tremendous amount about, scheduling trades and how to find the right trades for production homes. But I knew that there was a lot more to it. And so there was a very large developer in San Antonio who had a bunch of land that was already entitled. And he reached out to me and asked me if I wanted to come down to San Antonio, help him develop the land, and then build the houses on the developed land and sell those houses. And I told him, I said, hey, I will know how to build the hell out of a house, but I have never, brought in utilities, built roads, and all of those things, done the mass excavation on some of these sites, especially in San Antonio where it's all rock. He said, if you move down here from Austin, I'll teach you everything that I know and everything you need to know. And so that's what I did. This was back in 2004. And we moved to Bernie from Austin, which was quite a bit different. And but when I was expecting me and the developer to kind of work together on all of it, luckily, he's got some guts. Never once stepped foot on the job site. I got the engineered plans, got for the site, the roads, the utilities, and I basically said, okay, I'm going to hire guys, I'm going to fire guys, I'm going to run equipment, I'm going to figure out how to lay all this pipe and build the roads. And, when we get done doing that, we'll get all the neighborhoods accepted, and then we'll build the houses and sell them. That's the plan. Well, I never built a house in San Antonio, but we did successfully develop the land, put in the roads, put in the utilities. We got really, really proficient at utilities, running the water lines, the sewer lines, doing heavy excavation and dirt work. But we ended up selling all the lots. And at the same time, we were doing commercial development, building tilt wall buildings, office parks, and steel metal buildings and warehouses and things like that, all on land that we would do the feasibility, we would buy it, we would get the entitlements, we would do the engineering, we would work with the architects, the engineers, come up with it, build it, and sell it. And the developer at that time, he's in his 70s now, but he'd been around for a long time, been doing real estate for a long time, and he was very smart. At that time, at that point, the company had grown. We had several employees. It started out just he and I. And he said, hey, man, this isn't going to last. These prices that you're seeing where everybody feels like they're missing out and they got to buy a house right now before prices get too high or they won't be able to afford it. He said, all that's going to go away. And all these people that are making a bunch of money, they're all going to eat it. A lot of them are going to eat it because they're not planning for the next phase as real estate goes in phases. And he said, so when this happens, I don't know when it's going to happen. He said, it's going to turn off. And when it turns off, it's going to turn off quick, and nobody's going to be spending any money but the government. And so what we have to do is we have to take our skills and we have to go and we start doing complicated work, more complicated work than just what some guys in a pickup can go and do. And so what we started doing is we started bidding San Antonio water systems work, where we would go in and we would basically do, like, neighborhoods are typically pretty simple as far as running the gravity sewer lines and installing some water lines. But when you get into the different collection infrastructure that's not a gravity line or just not a water line, where you're talking about lift stations, pump stations, wastewater treatment plants, water treatment plants, booster stations, it gets a lot more complicated than just regular, quote unquote, laying pipe in the ground. And so what we started doing is bidding complicated work like that. And he was right. And, come 2007, 2008, it did. Everything stopped. And the financial crisis sent obvious ripples. The real estate market froze up. Lending froze up. And the only people that were spending money was the government. So we went into that with work, and we stayed busy. And that grew into going into South Texas when Eagle Ford Shale got really, when it lit up, and they found they started fracking in South Texas. A lot of the infrastructure contractors all went to the oil field. Well, we saw an opportunity that the federal government spends a lot of money through the Texas Water Development Board along the Rio Grande, along the Texas-Mexico border. And so we really cut our teeth building water and wastewater treatment plants, going and building this infrastructure along the border, really with no competition for quite some time, because all of the sophisticated contractors went to the oil field. And so over time, a lot of other contractors realized, the infrastructure contractors realized there was a market down there that could be tapped. And then, competition really started getting more and more. We still do a lot of work in South Texas. We do a ton of work in Corpus. The developer that I was working for, we became partners in 2008. And there's me and him and two others. And we run that infrastructure company. And so right now we probably do about, I think we do about between $80 to $90 million a year in infrastructure contracts. But it all revolves around environmental infrastructure, water treatment, water collection, water treatment for drinking or wastewater treatment, plants, pump stations, collection systems, things along those lines, which they're not, all of that stuff is required in order for real estate to work, because you got to have water and you got to have, somewhere for the waste to go. So during the course of all of this, we still had a pretty good knowledge of, even though I was working for him, I gained a pretty good knowledge of how to underwrite real estate development. And so it created a habit of always looking for property, always looking for opportunities. And so my first real estate investment on my own was actually developing. I bought some land in Austin, and we subdivided the lots. We brought the utilities to it, and we built condos just south of downtown. And we ended up selling them all. And that was my first thing. You want to talk about mistakes? I wish I would have held on to them. My life would be a lot different. But they made great money, and I used that money to move on to other investments.
How old were you when you built those and then ended up selling them?
How old was I?
Yeah, how old were you? Like, how long ago was that? And what state of mind were you in? Were you, where were you in your life?
I think I was 30. I was probably 34 when we bought the land. Something like that, probably 34. And then, one of the big things about development that can make or break a project is the engineers. And so went through a couple engineers. They can slow the project down as far as, you know, a lot of engineers say, hey, they paint a really good picture like lawyers. And then when it comes down to it, you know, they're learning as they go, and they can slow the project down and drive up your holding costs. Luckily on that one, the way I bought that property, I knew that there was a problem with the property. We bought it from a trust. And I knew that there was a problem with a very old lien from somebody that was one of the original owners. There was a judgment against the property, and the owner didn't know about it. So before I bought it, I ran title, and I knew about it. We locked it up, and it took them about a year to clear that up. But we were locked up in contract, so I didn't have any holding costs. They couldn't sell it until they straightened up that deed problem, but they also couldn't get out of the contract. So on that one, the financial burden as far as holding costs, unfortunately for the seller, they were carried by them. So by the time we got our engineering done and ready to go, that's pretty much right when we got the property, and we were pretty much shovel ready. So that's kind of that's kind of how my backstory and how I got started in construction, and really the birth of my real estate investing career.
Yeah, and you've grown it quite a bit. I mean, you're, you know, one of the owners of the company, right? You know, you guys have tons of employees. I think you were saying, you know, what, 70, 80 employees working for you guys right now? Yeah, and then you do, you know, what, millions of dollars of deals every year in Texas here?
Yeah, we do. I would say our average project size, you know, we compete against billion-dollar companies. The work that we do is very complicated. And so there's not a lot of grassroots, just guys doing it. I mean, we compete against companies that are, you know, Weber, they're out of Spain. You know, they're national companies. Some of them are publicly traded. And so that's the type of work that we do. But, you know, those guys will go and do billion-dollar contracts, but also do the smaller contracts. We compete with them on the smaller stuff. Our average project is anywhere between 5 to 10 million, going all the way up to $30 million.
Yeah. And how many contracts are you trying to do per year right now?
It just depends on the workload. I mean, it depends on the size. You know, at any given time, we probably have about 8 projects going on. And, you know, we have project managers, we have superintendents for each project. We've built a project management system that has totally changed my life and the company's life as far as our ability to manage the projects and control costs and time. But the thing about these projects versus, say, like building a house is nothing is the same, and nothing is bought off the shelf. I mean, we deal with things that have 2-year lead times. And so scheduling and finagling and you know, dancing all of this and bringing all this together is not only is the work complicated, the contracts are complicated. And a lot of times people say, hey, why do you do that, man? Like it's so complicated. It is. And sometimes I ask myself the same question, but here's the deal. No matter how bad the economy gets, people will always have to go to the bathroom, and they will always need to have something to drink, and they're going to keep having babies. And so, and the government will, I mean, it's, if we don't have water and we don't have sewer, we don't have civilization. And so those things are a very high priority in terms of spending. And so if you can figure out how to do it and you're sophisticated, you're always going to have work, especially if you're good at it. Doesn't mean it's easy.
So, you know, I think the average viewer, like the intended audience for something like this, is, you know, probably the average Joe, you know, looking to either get into real estate, probably doing pretty well for themselves in their career, and saying, hey, you know, real estate's pretty cool. You know, it's diversified. You know, let me get into real estate. But, you know, I want to spread knowledge about, hey, what's it like to really do investing in real estate? And you're saying you have some specialized skill in construction. So I'd be curious to know, you know, as transparently as you're comfortable being on some of these projects, you know, some of the big ones that you've done, you know, what do the numbers look like? How long do they take? You know, have you ever lost money on a deal? Do you have a story, of a deal that hasn't gone well in the last, let's say in the last year, where you may have lost some money on it?
Yeah, they sometimes they're just home runs and sometimes they're real stinkers. I mean, we've had jobs they've lost over $1 million.
Yeah.
And
yeah. I think people would love to hear that. So yeah, what's like an example of one?
So you can have, there's different types of losers, just like there's different types of winners. So I'll give you two examples. One of them, we had to excavate down in really, really wet soil, really unstable soil. We had to excavate down about 45 feet. And we were installing a concrete structure. It's called a wet well. And it was open excavation. And we were backfilling it. Backfilling means putting the dirt back in. We had set the structure, and it comes in sections. It was precast. And as we were backfilling it, the joints that come together on these giant precasts, just imagine a giant precast square, a concrete square, right? It's hollow. And they have little joints where when they come together, they kind of work together like this to keep them from sliding. Well, during the casting process, there was not a difference in elevation. And we put we put this thing called ram neck on it, and it's supposed to help it stick and create a waterproof seal. But in this case, when we put this it's called a bituminous sealant on it in between the two concrete, and it was smooth, it actually acted like a lubricant when they move laterally instead of vertically. And so what happened is they shifted on the bottom at 45 feet deep. And we didn't know until we got done backfilling it. And so it was very, very dangerous. We had to excavate it out and pull. I mean, these concrete pieces weighed like the base weighed 90,000 pounds, to give you an idea of how big it is. And so obviously you don't plan for things like that. We had to buy a new base. We got into lawsuits with the precast company, and everybody's very, very good at covering their asses on the contracts when you sign indemnity clauses and things along those lines. And it ended up taking us a very long time to recover. And we lost over $1 million on the project because of the time, the labor, the equipment. It just created a lot.
Yeah. When you say you lost $1 million, like I'm curious, what did you go into this saying, hey, we'll bid this project at this, here's our estimated cost, here's how much we think we're going to make on this. And then from this, thing that happened along the way, you ended up losing $1 million. Like, what are some of the numbers that you expected?
I want to say that job, this was a while ago, that job was probably about a $5 million project. And when we estimate, these are very rough numbers, because they're all different. They're all the same, depending on your subcontractor load and equipment, things like that. Typically, back then, competition was really, really stiff. And you would bid these jobs, you're going to laugh, at probably a 10% margin. You would hope that you could make 10%. So you go and you bid a $5 million job, you hope that you're going to make $500,000. Sometimes you do, sometimes you don't. Sometimes you make more. And, on bid day, when we bid these jobs, there's so many moving parts and there's so much going on, and there's no way you're able to get a price for everything. And you just go a lot of it based on experience and your plugging numbers, your estimating numbers, and on your bid sheet, when you go to buy everything out, you say, hey man, we got X amount of the budget. See if we can get it. Maybe we had $70,000 in the budget for masonry and we get it bought out for 35. Great. We're $35,000 under budget on masonry. That doesn't mean anything, because you typically have like 150 line items that you got to buy out. And so just because you hit a home run on the masonry doesn't mean you're going to hit a home run on coatings. And so you just hope at the end of the day that everything everything works and that there's a little bit of money left over to keep paying your bills. And the only way to survive those things is you don't sit there and put your head down and go, oh my God, I got to file bankruptcy. You got to bid more work. You got to put your head down. And a lot of people say, well, why don't you sue them? Why don't you do this? Why don't you go that? And why don't you fight that? It's because courts take time. And not only do lawyers take your money, all the time that you're spending dealing with lawyers and dealing with depositions and dealing with subpoena responses and actually going to court, that's time that you're not bidding work, because the only time that you're generating revenue is when you're getting paid for your work. Yeah. This is in construction, not real estate. And so a lot of times you get into these situations and you realize it's more profitable to just let it go.
Yeah, I hear that. So I want to kind of open it up and say, hey guys, if you guys are hearing this and have some comments or thoughts or feedback, for Leighton about his stories, like just chime in. This is an open conversation, so feel free to ask any questions away, and we'll kind of bring them up. But I've got some questions for you. So like, obviously what you're doing is very specialized, very complicated. And the average person watching this probably isn't going to be in heavy, wastewater construction for governments that you're doing. So if you were to relay this to the average person who's saying, hey, I want to do houses, I want to do multifamily, I've heard of syndications, I've heard of triple net, these are all some terms that like, it just seems easy, right? You buy a cash flowing asset, it's pretty passive, you put a manager in place. What's your take on some of these, more common investment vehicles that are getting popular these days?
Yeah, so obviously tons of people always ask me, hey, what do you think about this deal? Hey, I want to do this. I want to develop this. I get asked all the time to look at a piece of property, and 99% of the time I'm like, I wouldn't touch this. And
why is that? Yeah.
Well, because it takes a lot of time to find the right property. And as people are starting out, a lot of times they don't understand that finding property almost has to become a job or a lifestyle, and either driving for dollars or making multiple offers and things along those lines. But in terms of getting your, like, the most successful people that I've found getting into real estate from literally nothing is probably buying a rent house. And either that or joining as a limited partner into syndication and spending a lot of time with the GP team, asking the GP team how they're doing it, getting to see the underwriting, attending walks as a limited partner, and just soaking up whatever they can and offering, even though they're not getting paid, even though they're not getting the split, that, you're either going to get it from having exposure as a mentor, or getting into the real estate by something small where you're either going to break even or just barely cash flow, and walk away saying, oh my God, I learned a lot. And for example, like, I have a guy that works for me, and he's in his 20s, recently out of college, and he ended up buying a couple of houses as an investment. And, I walked him through it. He got an FHA loan, got a construction loan. I helped him do the whole thing. He's cash flowing. He's great. And he wants to sell it. And, but I was just talking to him today. He's like, dude, I can't believe how much I've learned through this. Like, how much it's a full contact sport. You know what I mean? Even something as small as a house. So for somebody that just wants to, first off, you just got to do it. You got to make the jump and get in where you can. And if you can find a GP team that has a good track record that you trust, and I would definitely go for one that has a good track record. Somebody that other people trust, or somebody that personally, because that is good with money themselves. And that you would trust with your money, and then just ask a ton of questions. One of the problems that I had going into it is, even though I had a great, I came in and I kind of learned backwards from a lot of people. Like I jumped right into development myself. And that's different than most people's stories. Most people start with, say, like a single family home or a duplex and things like that. But I didn't ask a lot of questions, man. What I realized is that, I would sit there and I would spend time and I wouldn't make a decision, and I would sit on things and I would research things, and then what I realized is I would just ask somebody the question and they would come at me with some bit of information that I didn't even know I was looking for. And I'm like, oh my gosh. Like, and then I realized, like, the power of networking, it's crazy.
Yeah.
And even though, I mean, I have a lot of stuff that I gained like on my own, but I mean, like when you really start networking, meeting people like you and other people like Sharar, it's just like you're just exposed to a way of thinking that you don't even know existed. You learn things that you didn't know you didn't know.
Yeah,
And
totally.
so,
well, I got real quick. We've got a couple comments that I want to kind of get to, but I want to ask, just to put a tail on this, to say, all right, well, you learned a lot and you're figuring stuff out. So for the average person that's saying, hey, I want to get into real estate, but like, what's like one or two pieces of advice about, how do they figure out the stuff that they don't know yet? How do they take that next step?
Wait, it's okay. Say that question again.
So someone wants to get in, they're not familiar with real estate. They don't want to make a big mistake. They don't want to lose money. What's the next thing that they need to do to take a step in the right direction?
You're probably asking the wrong guy, because I've always been a giant risk taker. I've been a huge risk taker. I mean, you can see it in the way we bid jobs. I mean, you got to, if you don't know anything about real estate, you just got to find other people in the business and start asking questions.
Yeah.
So you go from not knowing anything about real estate to knowing a little bit about real estate. Read the books, listen to the podcasts, surround yourself with other people that are immersed in it, and it becomes it becomes a lifestyle. It's what you live, it's what you breathe and eat and live. And you talk about it at work, you talk about it at dinner, you talk about it with your friends. I mean, you just gotta go from not knowing anything to knowing something, and that's just seeking information. YouTube. I mean, I can't tell you how many great Excel formulas I've learned on YouTube for real estate underwriting.
Yeah. So Kyler's got a question. I don't know if he's asking for me or for you, but he's saying, how many people do we have on the acquisition side, and what are we actively looking for? Any insight that we can provide on underwriting. So I'll just say for ours, obviously we're looking for multifamily apartments. I've got one other guy besides myself out there looking at deals, but we are also brought deals by a lot of our network and a lot of our partners. I would say we've got, I have a list of maybe 150, multifamily brokers in Texas that I have in an email list that I send out deals. I mean, I'd say of ones that I know pretty well, there's probably 30 of them that they'll send me a deal every week or two of just what's trading on the market. Most of them, are being market price, and we buy under market price. So we'll sift through probably 100 to 130 deals before we actually end up buying one. But I mean, yeah, there's not a lot of people looking for deals on my end other than just, myself and maybe one other teammate. Plus, we've got 5 or 6 other general partners that I like to do deals with that are out there looking. But, Leighton, on your end, I guess if you're looking for some of these construction projects, where do you find that next deal that you want to bid on?
Well, I mean, as far as construction projects, we use, there's certain things that are geared toward construction projects like CivCast. The stuff that we bid on is public. They have to put it out to public bid. And so there's aggregators of all these different, public entities that put it out for construction. But as far as real estate deals, I mean, I'm always looking and, talking to realtors, sending out specific parameters. Some of the best deals just me, a lot of them are just organic through relationships, talking to people, finding stuff off market, knocking on doors, stopping and talking to people and things along those lines. But it's few and far between. I mean, the real deal as far as finding great deals is putting out your specific parameters to real estate agents, just like what you're doing, and get a reputation as somebody that not only knows what they're doing, but has the ability to close a deal. Because you got to look at it from their perspective. They don't want to spend the time calling if you're not going to close. Real estate agents just want to close.
Well, let me ask you another question that I know I always wonder. So when you go to these multifamily conferences, you got people up on stage saying, "Hey, I got into real estate. I flipped a house, and then I, joined up with one of these coach gurus, and in the last 3 years, I've acquired 2,500 units, and I'm making all this passive income, and life's pretty easy." I mean, from your perspective, how many deals are you taking on at a time? And because I know this about you, you're the guy that's doing all the work. Some of the guys that get up out there on stage or they're in all these deals, they're not the ones managing subs. They're not the ones, reviewing the rent rolls, making sure that the project is profitable every month. They might sign in a loan, raise a little money, and then go on to the next. So if you're actually doing the work, how many deals are you doing all at the same time?
Not a lot. I mean, as far as the syndications, the only ones that I'm involved in syndications are with the ones that we have. I mean, all the other deals that I've done are, we're sole owner. We buy the land, we buy it all. We don't even have partners, and so obviously when you have that, the risk is greater, but the profit is also much, much larger than having a little sliver. I see these guys.
Are you doing because you're doing your multifamily and you're also doing your wastewater construction government jobs at the same time. So you're doing one or two government projects at the same time. You got one or two multifamilies at the same time going on.
Yeah, I mean, so right now, I mean, I probably have, I'm the operations. I'm the vice president of the company, and I run all the construction. And so on that, I mean, like I said, at any given time, we probably have $70-80 million of construction under contract at any time. And then, right now, what I have going on with you, I have, our short-term rental stuff. I would say that the apartments are done. I've pretty much stepped out of that in terms of being active, aside from just how we touch base on it every once in a while. I'm doing another industrial development right now. I'm building some warehouses right now. And then I have another industrial development that I'm doing in San Marcos right now as well. So those two are ongoing. Only one is under active construction. And, I have one half of that leased out, and I'm starting the second phase. Guys are showing up tomorrow to start standing all the steel. The steel was delivered yesterday.
Yeah.
And so as far as quantity, it's not very much right now. But I'm still, because I'm doing most of it, and I'm as far as the stuff at San Marcos, the stuff I'm doing right now, I'm the sole owner. I don't have any partners. Mm-hmm. And then the other stuff in the 60,000 square feet of warehouse that we're developing, I have one partner, but we own the land outright.
Mm-hmm. Yeah.
And so in terms of these guys that say like, "Hey, I started this, I bought this house on TikTok, and now all of a sudden I own 1 billion units." Man, I see a lot of it. I think a lot of it is probably BS. And if they do have if they do have that, they're not managing all of that. They probably own a very small part, and they're probably cherry picking the details to make it sound much more glamorous than probably what it is. That's just me. What do I know?
Yeah. Well, guys, keep your comments and questions coming in. This is open forum, so anything you guys want to know. But I know something that I've definitely learned in working with you is that when we're picking partnerships or projects or whatever, we come in, we've got a budget, we've got a scope of work, and I know on our deal in Canyon Lake, that one ended up being a lot more work than you initially signed up for. So I'd love to hear your opinion about what changed from the time we first sat down until, you figured out how much work you put into that deal now.
Well, okay. Yeah. So, I mean, we'll just kind of get into the, some of the dynamics. I guess this goes into the dynamics of partnerships, right? And when you enter into a partnership with people, it's like a marriage. You can't just say, "Hey, this is a little bit different. I'm stepping out." You gotta put the project first. Just like in construction, it doesn't matter. Like our mantra at our construction company is, we will finish the project no matter what the financial consequences are. And we have to, because there's legal ramifications. Like we have performance bonding. And so I work in a world where there's ultimate accountability as far as performance. And if you get into a project and things are different than what you anticipated, then that means you have to pick up the difference. And so when we got into, you're specifically asking about Canyon Lake, about being more work. We got into it, and I figured that my role was going to be more along the lines of, hey, we're going to help buy out, some of the other guys we're going to help manage. But I quickly realized, and this is a problem of mine, that I do have a lot of experience in construction. And to me, it's just common sense, but it comes with many, many years. And sometimes I forget that, construction isn't just basic knowledge. And so when I realized that we weren't going to be able to get what we wanted without me being more involved, I just said, hey, this is the nature of partnerships. You got to step up, and then we can shift roles in other places, and that's just how it goes. And so that's, I wasn't going to let the project suffer because some of the construction knowledge wasn't there. Does that make sense?
Yeah. What I'm hearing is that you got, the flexibility in your personal life to say, hey, if I need to, put time in, I have the ability to do it. I'm not constrained. But then more of that, you just got a great attitude to say, whatever needs to get done, I'm going to do it. It means is there's more work that's done. I'd rather work harder to have a good result than let people down. And I think that's extremely important to hear.
Well, yeah. And I mean, I'm a big believer in who, not how. I have a lot of people that work for me. And, but when I sign up as a partner, I'm going to perform as a partner. And I'm not going to, especially if we have investors, that if something needs to be taken care of, and investors' money are at risk, if it doesn't get taken care of, then I will step up to the plate and make it work. And I hope it works. I mean, we have a great product. We have a great product now. I mean, the place is beautiful.
I gotcha. So we got a question. Kyla wants to know, how can people like him help out what we're doing, and say, hey, how can others be a benefit to grow us and provide value to us?
So how could you help, Kyla?
That's a good question. I know he's doing real estate right now, and he's kicking butt, and he's doing all the right things. But yeah, I know on our end, like there, at least in multifamily real estate, there's three parts of the business, right? You got to find the deal, and that comes from either networking or talking directly to sellers and finding somebody that wants to sell at the right price. Or there's asset management, where if you know everything about, like Leighton's got construction down, if you know how to handle, property management, managing the rent roll, managing, delinquency, evictions, ongoing maintenance, those kind of things, asset management is key, or raising money. Those are really only three pillars to doing real estate, either on single family or multifamily side. So if you can help out with any of those, you've got access and in. I will say a lot of people that, like operations and asset management is the thing that can kill a deal. So just if you can find a deal, that's valuable. If you can raise money, that's very valuable. But whoever's in charge of operating that asset, the other two people really need to rely on. So that's the most important part. So I think that'd be pretty difficult for someone to give up control of that. But, if you can find a deal and you can raise money, I mean, a good deal is a good deal. Doesn't matter where it comes from. Good money is good money. sometimes there's strings attached, so you got to be careful who you partner with and what strings there are. But, yeah, you can definitely come in with either of those. So, yeah, finding deals, finding money, and then helping out on the asset management side. So, so if you guys got more questions, I know I've got something for Leighton. So, with where we are in the market cycle, there's so many aspects to real estate. Like, do you see opportunity out there for people that want to do real estate that maybe aren't familiar, or do you see opportunity for people that are the experts and the pros that can say, hey, I think we need to focus in this area now? I mean, what's your opinion about the horizon?
So the way that I look at real estate is I always look at buying real estate for the next cycle.
Mm-hmm.
Meaning, like, you remember the other day I called you and I was like, dude, I actually, high interest rates, I like them. And it's just a number. Because
Mm-hmm.
if you can set yourself up and, I'm refinancing some property at like 8%, right?
Mm-hmm.
And with like a 2.0 DSCR.
Mm-hmm.
And so, and I'm pulling out a significant amount of cash. And I go into that with a very, very high level of confidence that I'm going to be just fine. Because
Mm-hmm.
if I had refinanced this at 3%, knowing that 3%, it ain't coming back. Like, they're not going to stay there. That's a temporary. I've been in this long enough to know that that's an anomaly. And so when you refinance and you can make your deal work healthy at a high interest rate, if and when they come down and it's time to sell, all that does is decompress prices. And so in my mind, is there opportunity right now? Yeah, because people are waiting. I'm going to wait for interest rates to come down. What does that mean? That means people aren't buying. Houses are sitting. Prices are dropping. If you can make it work now at a low price, the only thing that doesn't change over the price over the life of a real estate asset is the acquisition price.
Mm-hmm.
Interest rates can change, income can change, all of that can change. And so where you make your money is your buy.
So I have a lot of, I got so I have a lot of, potential deals that come my way where even from brokers or other investors, and they'll say, hey, Ryan, I got this deal. We're going to increase rents by $100 a month. And then, it'll be breaking even at this 7% interest rate environment we got right now, 1.0 DSCR. But in 2 years, we'll refinance down to a 4% or maybe a 5%, and then it'll cash flow. I mean, what would you say to something like that?
How do they know they're going to refinance at 4%?
Yeah.
I mean, why didn't they factor in underwriting at 8%? You know what I mean? With the deals
Mm-hmm.
now, like all these guys, they say, hey, interest rates are going to come down. We have this. I mean, the Fed is the one, they're the ones that control the rates, and they don't even know what they're doing. So for somebody to come back and say, hey, I'm going to refinance at 4%, then even 4% is low, man. For a long time, I mean, getting an interest rate at under 7 was a great rate.
Yeah.
And so, like, to sit there and bank on a deal and go in, and if it doesn't cash flow, and you got to feed the alligator, and because real estate can be an alligator, man. They'll take everything you got. And so, if you have a debt that's at 4%, and it comes up and you got to refinance, I mean, just do the math at 7%. You ain't swimming, man. I mean, chances are that if you were at a 1.3 or 1.4, even a 1.4 DSCR, and it goes up 4 points or 3.5 points, there's a good chance you're not going to be feeling too good. And so to sit there and buy something and take on debt under the assumption that in a couple of years it's going to go down to 4%, to me is really naive, because if you look at the Fed's, if you look at the Fed's responsibility is to create stability in the markets.
Mm-hmm.
And interest rates up or down create instability. High fluctuations in interest rates create instability in inflation, deflation, in prices. And so if somebody just comes in and says, hey, I'm going to slash it to 4%, what's going to happen? Inflation is going to eat our lunch again. So so that's just my opinion, but I don't have a crystal ball. That's the way that I operate. You know,
so I'm hearing you right. Like, you know, for the guy that's come in and saying, hey man, I've underwritten 10, 20 deals so far. Like this one, it's in a good area. It looks really cool. It's next to the Tesla building over here in Austin. I see the potential right now. You know, we're buying it. It doesn't really cash flow yet, but in the future, there's opportunity. You're saying that's not really a deal. You know, you got to keep working. You got to find a better deal.
I mean, look, there's a lot of very smart people in this business. Tons. I think the smartest people in the world are in real estate. I'm probably not one of them. All I can do is tell you how I operate. You know, I take big risks, but they're calculated risks, and they're risks based on my experience. Me personally, I'm not going to guarantee a loan. I'm not going to be signed as a guarantor on the loan for a deal that loses money off the bat, banking on interest rates lowering to something that, in my opinion, would create instability in the markets that goes against the ethos of the Fed. To me, that's and to me that's just it's crazy. It's a guess. It's a coin toss.
So yeah, it sounds like, you know, should we wait till next year, or what do we do then?
As far as get lower prices.
Just find better deals.
Yeah, just find better deals. And you know, the prices, the deals don't work unless they work. And a lot of times, I mean, look, we looked at a certain piece of property in San Antonio. They wanted a certain price. And we offered them the price in which it worked for us. Guess what? It's still on the market. You know what I mean?
I know you and I have even looked at properties that looked great from a price per square foot, price per door area. And we're like, man, I can't believe they're selling square footage this cheap. And we go over there and then you see why. And you're like, oh man, this is a war zone. You know, there's barbed wire on the fences. You know, there's, you know, aggressive breed dogs barking at you from everywhere you turn. And, you know, there's bars on the window. And you say, okay, well, even if we renovate, we put 20 grand per unit into each one of these and make them, you know, perfect. You can't change the neighborhood. So, you know, you can't turn a bad deal into a good one, you know, just because it's in a bad location already.
Right. And the only thing that you can control as a buyer is the price. You know what I mean? How much you pay. That's the only thing you can control. You can't control the interest rates that you're getting. You can't control the rent that you're going to get, the market. And a lot of times you can't control the sale price. And so the only thing that you're in total control of is how much you're going to pay for the property.
Right.
So in my opinion, as far as what you do, find a deal that works.
Yeah, gotcha. Well, we're getting to the top of the hour. So, you know, any final questions from the audience? And then, you know, Leighton, any final remarks or things that you think people should know as they're starting to get into real estate or thinking it's easy that you want to say, hey, here's how it really is?
The only thing that I can say is that, like, I see a lot of people saying, I mean, I have friends, even in our 40s, people say, oh, well, I need to do something, but fear rules the roost, right? And you just gotta, there is a point. Yes, you can do a lot of research. You can, you know, read books, you can listen to podcasts, and all of that is great. Read as many books and listen to all the podcasts, you know, Jake and Gino podcast, Bigger Pockets podcast, you know, all sorts of different real estate. There's tons. And you learn a lot. But none of that knowledge is any good without action. Libraries aren't rich because libraries can't go do things. But they got a lot of knowledge. But that knowledge is no good unless you put it to use. And so if you take the time to learn, all I can say is just bet on yourself. You're going to figure it out. and you're going to go in there and you're going to make the decisions and you're going to make the moves. And chances are it's going to work. And so all I can say as far as getting into real estate, you just got to grab yourself and you got to bet on yourself, and you can't let the fear rule, and you got to make the jump. If you're scared how far you'll fall, then you're never going to jump.
Yeah. Excellent. Well, I appreciate you coming on and sharing your wisdom with everyone. I know you have a ton of experience in real estate, construction, working with governments and everything. So I know I found it extremely valuable. I learned a lot. I hope everyone, watching this on, live Facebook, LinkedIn, or YouTube got a lot out of it too. And, if anyone wants to reach out, Leighton, what's the best way for people to get a hold of you these days?
I'll give my email address.
If anyone else got some value out of this, let us know. Put, a like on this, put a comment in the chat. And then if anybody has ideas for what you want to hear us talk about in the future, let us know. If you guys have any friends in the business, or you think you've got some good stories to tell about the interesting, darker side of real estate investing, or maybe some difficult deals that you learned a lot out of, please feel free to reach out to me. Our website is topproducerinvestmentcapital.com. My name's Ryan Tanel. You can find me on any of these platforms here, and just kind of post a comment with what you have in mind, and we'll reach out and get someone scheduled for our next post. I think the next one we'll do. I like this time slot, Wednesdays at 6 p.m. Central. I want to say the next one we'll do either in 2 or 4 weeks from now, just depending on how quickly we can get the next guest on board. But other than that, everyone be safe, have some good investing, and we'll catch you soon. Take care.